Good afternoon. I thank Outlook Money for this opportunity to be part of this August gathering. I propose to discuss how innovation in the national pension system, that is NPS, has made pension accessible to all. You know, pension is a necessity. Prudent financial planning, especially early retirement planning, is important for long-term financial well-being. Pension as a financial product is not readily substitutable with any other financial assets. Pension provides lifelong financial security for self and spouse on retirement. Pension assumes added urgency at the current juncture of our socioeconomic development. In this context, I may highlight a few issues. First, rising longevity. The share of population over the age of 60 years is projected to increase from 10.5% in 2022 to about 20.8% by 2050. This aging is likely to accentuate as every fifth Indian is expected to be over 60 years of age by the middle of this century. Life expectancy is also showing a steady increase with improved nutrition and healthcare. Rise in the share of older people coupled with higher longevity would imply that income provisions would have to be made for longer periods for decent post-retirement life. Second, increasing dependency. The old age dependency ratio is expected to increase from 18% in 2020 to 30% by 2050, exerting pressure not only our younger generation but also on our financial resources. Its financial implication would be disproportionately large unless working age population make provision for their future. Third, rising, we just heard about health insurance, it is the healthcare cost. As people age, healthcare expenses typically increase. A well-planned pension provides the resources to manage this cost and make old age care affordable. Fourth, changing family dynamics. The implied insurance of traditional family structure, where elderly parents largely relied on the children for support, is changing. Adequate pension offer financial independence to manage one's own affair. In this context, let me turn to the features of the national pension system. Against this backdrop, how NPS is positioned to cater to the wider need of for pension. NPS is a flexible, digitally enabled, easily accessible, low-cost pension product with market-driven competitive returns. The introduction of NPS in India marked a paradigm shift in transition for a defined benefit DB plan to a defined contribution system, enhancing the stability of our pension system. In the past, pension was perceived to be the privilege of government employment. It is no longer so with the introduction of NPS in 2004. First for the government employees and then extended to the private corporate, including the common person, and now to children with the scheme of NPS Vatshalya. NPS Vatshalya can be seamlessly ported to workplace pension on the child coming of age and joining the workforce, thereby providing continuity to one's retirement savings account. Thus, any member of the family from infancy to 70 years can really join NPS. Flexibility in NPS is the result of innovation informed by user experience. First, NPS has an unbundled architecture with each intermediary at the background undertaking a specialized activity in a professional and cost-effective manner, attaining economy of scale. This architecture helps minimize the risk of a sole dependency on entities involved and eliminate the risk of failure of the system. Second, digitalization has played a crucial role. It eases onboarding and significantly reduces the cost to the subscriber. One could join NPS digitally using net banking, mobile apps or ENPS, or physically through bank branches, including now we have enabled the regional rural banks, they can also offer NPS. Since we are partnering with this event, I just saw outside there is a stall by our NPS trust. So there's a QR code one can scan and can seamlessly also join, through ENPS without hardly any cost. Third, NPS offers flexibility in selecting pension funds and asset allocation. It offers auto choice and active choice of asset allocation. In auto choice, one gets to select any one of the 4 life cycle funds which balance risk with age among various asset classes. For example, as one ages, the equity allocation tapers down automatically. Alternatively, there is an active choice where the subscriber choose their own asset class depending on their risk appetite. For example, one can invest up to 75% in equity, irrespective of one's own age. Because if you're doing that, your own active choice, you can make your own cocktail of what kind of a pension that you need. Fourth, NPS provides a very low threshold of entry, making it truly a people's product. The NPS account remains active only with an annual contribution of 1,000 rupees. It is not necessary to contribute every month. Thus, NPS is also suitable for people with irregular income. There is no upper limit for contribution. It has its own advantage. For example, youngsters, contemplating to retire early can front load their contribution to achieve their retirement goal. Similarly, a subscriber can defer his or her exit and can stay invested in NPS up to the age of 75 years. Additionally, the subscriber has an option to withdraw the lump sum amount in the form of systematic lump sum withdrawal, SLW, in a phased manner up to the age of 75 years without, and they can also withdraw anytime. If they change their mind, they can withdraw anytime the entire amount also. Let me just capture briefly the progress of NPS. At present, NPS has around 16 million subscribers. 9.6 million are from the government side, 6.4 million private subscriber, with a corpus of almost 13.4 trillion rupees. Both private citizens and corporates have enrolled with NPS. Private sector NPS assets have also shown substantial growth in the recent years. The corpus from the private sector is about rupees 2.8 trillion. There are actually about 19,000 corporates with about 2.2 million subscribers, including 1.3 million from the private corporate sector. But the problem is the adoption of NPS by the private corporate employees, however, is not commensurate with the large number of corporates that have joined, underscoring the need for concerted effort to tap into the potential. The popularity of NPS is also rising among individual subscribers, with a subscription base of 4.2 million, expanding at a compound annual growth rate of about 22%, surpassing the growth of employer-based subscription. That means both from the government and what is coming from the corporate sector. The scheme under NPS has generated attractive return. The average annual returns in the inception under the equity scheme in NPS has been 13%, with 9% for the corporate debt scheme and 8.8% for the government security scheme. And for the central government, which is a conservative scheme, mix of equity and debt, and since inception, it is given a return of 9.5% per annum. So these are clearly very attractive returns if you compare with the market returns that you get in competing products. Despite all this, why is this pension coverage is so inadequate? The pension coverage in India is inadequate mainly because 80% of our workforce is engaged in the unorganized and informal sector, where they don't have access to occupational pension as in the organized sector. As economic survey 24-25 shows that around 58.4% of workforce were self-employed, 19.8% was casual labor, whereas there is no statutory access to social security benefits like workplace-related pension. Similarly, on e-Shram portal, Ministry of Labor and Employment, which puts out over 305 million unorganized workers were registered, suggesting that the bulk of the workforce goes uncovered by pension. This challenge is not limited to us. A recent study by the Organization for Economic Cooperation and Development, OECD, showed that Asia and Pacific region's pension systems are facing common challenges as they attempt to expand coverage and ensure adequacy and fairness while maintaining fiscal sustainability. While pension system designs vary, coverage of contributory scheme is a common challenge because of stubborn informality, because people would have to self-contribute, they have to be self-motivated to save for the future. At the same time, regional and global experience suggest potential for coverage expansion by focusing on workers not yet covered by design, such as self-employed, business owners, those in enterprises below certain size, and gig and platform workers. Let me conclude. There is a need to expand pension coverage so that people have adequate post-retirement income to lead a life of dignity. However, the adoption rate is low even among people who have the income to contribute, partly due to inadequate appreciation of the need. I hope events like this, focused on retirement planning, will help in improving awareness. The NPS has made pension available to all, irrespective of one's income and employment status. We have been working on improving the accessibility of NPS, both digitally and physically, to every citizen of India, and also to increase awareness. Once again, I thank Outlook Money for inviting me to interact with you. Thank you.